Welcome SMF Street, worldwide traders, and everyone else alike. This is called the Dow Jones monthly chart. And what we're going to do, just like we did in February when we called the reversal, we're calling for another market reversal that isn't that far away. What I would like to point out for the bull case is the bull has had 1, 2, 3, 4, 5, 6, 7 months of a monthly buy signal in play. One of the things that I am going to point out very clearly here is that the bull in the short term is going to be in trouble again. We called the 2011 reversal in February 16th, 17th, 18th, leading up to it. I will tell you that I'm 94.79% bought on the Dow. That means that the market is getting priced to perfection again. So therefore, we're going to have another bear correction. It's not going to be a bear market per se yet. However, when Bernanke takes off the QE tool stimulus, that's going to be not good for the bull. When we start removing liquidity, and we should have to raise short-term rates, is that all that cheap liquidity is going to have a price to pay, and they always end up in a nasty way. So in the very, very, very short term, there is limited upside on the monthly level right here, meaning that this was the 2007 breakout to the big reversal that we had here. And since this big reversal that we had, the financial crisis in 2008, we've come just like they do in all recessions and bear market economies, is that they re-leverage it with stimuluses after stimuluses. This is how, but they never. The problem is, everybody, is that we're going to have a market correction between 8 and probably 12%. The reason, 94%, look for a bear reversal, okay, in the short term. Doesn't mean that it's a full-blown bear market. No one is saying that. We are at a top and we are going to come down. And we are just too overbought. Yes, you can go up a little bit higher, but as we said, that part of the original reversal that we had when we had this big monthly wick down here, we popped back up and we've made higher highs in the Dow. The other thing is, when the US dollar rallies up, because there are so many short sellers in the US dollar, that when the US dollar's been tanking and all that cheap liquidity in the markets around the world, yes, there's been some economic expansion. No one's saying that there isn't. We're not here to talk about that. We're here to say today that on this date that there is going to be a Dow correction, and it's around the corner. When the dollar goes higher, that's not going to be good for equities. This cheap dollar trade, trashing the dollar, everybody is short the dollar, okay? The other thing that we want people to know is that the broader names, the leadership names, are just as overbought, and they too have to correct. We will go into a Dow Jones special series over the next 7 trading days as to how this reversal will take place. When it does start, it will start with the reversal bar, and this is, of course, it's a monthly chart. I'm just giving everyone here the monthly view. The monthly is so overbought that it's very rare out of the last 30-year period that I've seen them at 94.82% overbought on the Dow, period. MMTs on the weekly, though, because of the amount of correction that we had called for, is that on the weekly, we're working to the 90% level. The monthly reading, though, because it's a longer term, is that the amount of buying the dip in the bull run is created it on a monthly level to get much more overbought on the monthly level, right for a reversal. As far as the weekly goes, when we really look at this weekly, the weekly is going to make some very good tops, and I'm going to show right here, and it's all standard MMTs, standard technical analysis. This is what the big money makes decisions on. This is not your market maker platform, okay? We're coming up to the neckline here at resistance in the short term, okay? So basically, the percent DS, because we had that correction right here that we called for. It's on the stockmarketfunny.com homepage. Go find it. We also said we made a bottom. And we also talked about a blow off top. because it just so happens to be in those series of videos. And we were 100% correct. What I'm saying is that there's a correction coming around the corner. After Bernanke does the FOMC meeting on April 27th, has to start removing money. If the dollar rallies and they got to cover the shorts, it would be good for the dollar to rally. That's part of the high commodity and oil prices. People don't understand exactly why. They blame it all on the Middle East. What a great story that is. That's not the truth. We have people price gouging people everywhere. What I am saying, on a weekly level, we're going to hit at 89. We're going to get above 90. On a weekly level, we are going to have a Dow correction going through the month of May. There are 2 weeks, 10 trading days left for the full earnings season. Let us not forget, and let us be very coherent as to what I am saying about the current market direction. There is still upside market volatility. What I'm saying is that upside volatility is going to be a mechanism to sell into that strength, because we're just too overbought. And I will be doing a special on the S&P 500 and the NASDAQ comp. We will be having a correction. We have a couple of weeks left of, here's the monthly chart. Again, on the Dow Jones, we're right up here to that neckline. We're the first reversal then of 2008, and we're going to challenge it. So the bulls have gotten a great run when we called the bottom over here, because we did. We got all the live blogs, everything we wrote about it. No one would ever believe it. We've got into monthly buy signals over here. These are monthly sell signals that get real nasty. Over here, the monthly buy signals get real sweet. And it's all about directional movement. And it's all about we're overbought. And there will be a bear reversal. The thing that people should be looking at, MMTs, you'll be ready to sell short. That means on an intraday or opening morning level, they gap up, but they're going to roll over, because there isn't much upside left for this particular bull rally. This particular bull rally is overbought and will correct. Therefore, forward looking during that same phase that we called over here, in 2011, in February, we got another reversal around the corner. Overbought at 94.76%. Give me a break.